So the big thing these days is talking about bubbles, and it's making everyone very nervous. And not say there aren't risks of excesses, but looking at the full picture, I think, is really important. By the way, I used to be an investor. Now I'm a talk show host. Hi, I'm Jon Gray, and this is Market Views. They say there's a private credit bubble, there's an AI bubble, there's a stock market bubble. And I think it's too easy to just fall into the trap and say, oh yeah, all those bubbles, they exist. So I might gently pop each one of these three bubbles. There's been a lot of headlines on private credit because of some idiosyncratic non-private credit blowups. The reality, the facts on the ground are so compelling because what is private credit at the end of the day? It's basically taking an investor and bringing them right up to a borrower. And in the process, you eliminate a lot of the origination, securitization, financing costs that eat up the return. What we continue to see is lending to high quality, large scale businesses. You can earn a meaningful premium to what you can in liquid credit. And so to me, that's going to continue to make private credit quite attractive. In AI, it's underestimating the power of the transformation of this technology and the rationale for enormous investment to power this productivity revolution. We got to build a bunch of chips, a bunch of data centers, and a ton of power. And that requires enormous amounts of capital. And as a firm at Blackstone, we're thinking about our private equity, our real estate, our credit, our infrastructure. What are all the different ways we should play this? And at the same time, how can we make sure we're not taking too much risk and also be looking over our shoulders a little bit and saying, what's the disruption that's coming? If you think about the Yellow Pages business, which we all used to rely on, some of the younger viewers may not even know what Yellow Pages. For 75 years, they were amongst the best businesses in the world, and then they disappeared. I think we're gonna see more of that in a bunch of rules-based businesses. Keep your eyes on disruption. And then finally, in the stock market, yes, valuations are full, but this isn't what we experienced in 2000 when the biggest market cap company, Cisco, traded at 130 times versus Nvidia today at 30 times. I don't want to be everything's great, trees grow to the sky. There will be mistakes. There will be challenges. But if you think fundamentally a productivity revolution and investment boom are happening, maybe we should pay a little more for the stock market in that context. AI is starting to impact my life in a bunch of ways. I was at a wedding a couple weeks ago in Phoenix. I took 3 Waymos. All right, I'm in Phoenix, but I would actually say I'm in the future. When you sit there and say, is that the last autonomous vehicle I'm going to take? Or is it likely autonomous vehicles are going to fundamentally change driving over time? I think it's the latter there. I think on a human level, what it's going to do on the healthcare side to really move us towards precision medicine and much better choices about how you should exactly do healthcare, I think that's going to be powerful. I think we're at the very, very beginning of this game. Every Monday on Blackstone TV, our internal Zoom call, but it's Blackstone, so we call it TV. We do an economic weather report. So here's today's economic weather report. On the economy, there is a bit of weakness, certainly in Europe, and we're seeing pockets of weakness in the US consumer, particularly lower income consumers. But in aggregate, I'd say pretty positive. In the third quarter, we had revenue growth at our portfolio companies in private equity of 9%. We saw margins continue to go up. We're also still seeing minimal levels of default in credit with non-investment grade borrowers, despite all the hype you read in the press. And then on the inflation front, there's a bit of stickiness on goods and services, but when you look at some of the largest components, we continue to see deflation. So rental housing, what they call shelter costs, which is a 35% weighting in CPI, it's probably running in the real world about 1.8%. versus the 3.6% in the government data that lags. Same thing in the labor market. We've seen a cooling there, and it's showing up in wage growth. Hourly wage growth's gone from 4.1% a year ago to 3% today. All right, time out. Because people may say, well, why should I listen to that guy? His economic weather report, what does he know? I would say it's because we have a lot of little satellites out there, our own satellites. We have 250 companies. We have 13,000 pieces of real estate. And they provide us incredible insights in what's happening in a real world way. If you think about investing as pattern recognition, I think this is the number one advantage. So that's why you should listen to the Blackstone Economic Weather Report. The deal-making environment is definitely getting better. In the third quarter, in the U.S., M&A activity was up over 60%. IPO activity was up 100%. We took 3 companies public globally in the third quarter. Our credit pipeline in terms of new deals is up 20% year on year. And as the cost of capital, as the Fed lowers rate, as the long rates come down, as the IPO market strengthens, you just begin to see more and more deal activity. And obviously that means the folks here at 345 Park Avenue are much busier. There are a bunch of very compelling sectors where we have high convictions. All sorts of energy services, utility services, electrical equipment that plays this massive electrification play. Real estate really feels like it's at an inflection point. We've had 3.5 years that have been tough, but now we see cost of capital coming down, spreads are tightening, base rates have come down. At the same time, construction has come down a bunch in logistics and apartments, places like India, where we're seeing incredible underlying growth in the economy. Opportunity in Japan as they start to open up their public companies to foreign investment. We love to find sectors where we think the long-term tailwinds are really strong and we can buy high-quality businesses at reasonable prices. Thanks for watching. That was Market Views. We'll make it even better next time. See ya.